OpenAI is worth about $300 billion. It loses money on almost every single thing it sells. So what is the AI industry actually selling you? Take a guess in the comments before I tell you. Here's the story everyone believes. Artificial intelligence is the biggest gold rush of our lifetime. ChatGPT hit 100 million users in 2 months. That made it the fastest growing consumer app in history. Every company on Earth suddenly needs AI. Every app has a little sparkle icon now. Every earnings call mentions it 100 times. And the narrative is simple. The company with the smartest model wins. Build the best AI, capture the world, print money forever. It looks like a race to build a digital god, and whoever gets there first owns the future. So the money poured in. Venture capital, sovereign wealth funds, your grandmother's index fund. In 2023, investors put about $50 billion into AI startups. In 2024, it was even more. OpenAI, Anthropic, Google, Meta, all locked in an arms race to build the biggest, smartest brain on the planet. That's the costume, the brilliant AI lab racing to invent the future and get impossibly rich doing it. But follow the margin, and the numbers stop making sense. Let's start with the company everyone worships, OpenAI. OpenAI's revenue for 2024 was roughly $4 billion. Sounds incredible, except its losses that year were about $5 billion. So it spent $9 billion to make $4. Read that again. For every dollar coming in, it burned more than $2. And it gets stranger. Running these models is brutally expensive. Every time you ask ChatGPT to write a poem, a bank of graphics chips somewhere lights up and drinks electricity. OpenAI reportedly spends billions of dollars a year just on computing power, just to keep the lights on. Now look at the paying customers. ChatGPT has hundreds of millions of weekly users. The vast majority pay nothing. The premium plan costs $20 a month, and analysts believe even those subscribers may cost more to serve than they bring in. Then there's the training bill. Training one frontier model now costs about $100 million. Some estimates for the next generation run past $1 billion per model. And the model you spent a fortune building is obsolete in about a year when a competitor's cheaper model catches up. So the smartest labs on Earth are losing money at record speed, and their product gets copied within months. Anthropic, reportedly burning through cash. Even Google and Meta spending tens of billions with no clear payback yet. Here's the number that should stop you cold. In 2024, the big tech companies spent roughly $200 billion building AI data centers combined. And the total new revenue directly from generative AI that year? A tiny fraction of that. Some analysts estimate the industry needs to eventually earn about $600 billion a year just to justify the hardware it's already bought. So if the AI companies are all bleeding cash, who on earth is getting rich? Follow the money out the door of every single AI lab, and it all flows to the same place, Nvidia. Nvidia makes the chips, the graphics processors that every AI model needs to train and to run. Every lab, every startup, every tech giant, they all buy from the same store. And that store has a line out the door. In 2022, before the ChatGPT boom, Nvidia's data center revenue was solid but modest. Then, the gold rush hit. In its 2024 fiscal year, Nvidia's data center revenue was about $47 billion. The next year, it roughly doubled again, past $100 billion. Its total annual revenue rocketed to about $130 billion. Its profit margins on these chips, roughly 75%. That is not a normal hardware margin. That is a company that knows you have nowhere else to go. And in 2024, Nvidia briefly became the most valuable company on the planet, worth more than $3 trillion, not by winning the AI race, by selling equipment to everyone running it. This is the oldest trick in economic history. In the 1849 California gold rush, thousands of prospectors chased gold. Most of them went broke. But the people who sold the shovels, the picks, the pans, the jeans, they got rich no matter who struck gold and who didn't. Levi Strauss didn't pan for a single flake. He sold trousers to the men who did. And he built an empire that outlived every mine. Nvidia is Levi Strauss with a silicon foundry. Because here's the thing about the AI labs, they're not really competing to make money, not yet. They're competing to survive long enough to matter, and to do that, they have to keep buying chips. If OpenAI slows down, Google speeds up. If Google blinks, Meta pounces. Nobody dares stop spending. And every dollar of that fear, that arms race panic, lands in Nvidia's pocket. The AI companies are the prospectors, brilliant, ambitious, and mostly underwater. Nvidia is the general store, ringing the register on every hopeful digger who walks in. And it goes deeper. Below Nvidia sits a company most people have never heard of, TSMC in Taiwan. It actually manufactures the chips Nvidia designs. And below them, a Dutch company called ASML makes the only machines on Earth advanced enough to print those chips. One of those machines costs about $350 million. So the shovel has its own shovel sellers. It's shovel sellers all the way down, and every layer of that supply chain is more profitable and more certain than the flashy AI apps grabbing all the headlines. The chatbots get the magazine covers, the chip stack gets the cash. So the next time a headline screams that some AI startup is worth $90 billion despite losing money hand over fist, remember what you're actually looking at. You're looking at a prospector holding a map to a mine that might not exist. And somewhere behind him, quietly, the shovel salesman is counting a fortune that's already real. The AI boom looks like a race to build the future. It's really a race to buy the equipment to build the future. And the winner was decided before the race even started. It's a shovel-selling business pretending to be a gold rush. Next time, I'll show you how the cloud giants Amazon, Microsoft, and Google quietly rent out that same expensive gear and pocket the margin twice. The story's always in the margin.